Hi everyone. Imagine today you have a miracle crystal ball that can tell you exactly when Singapore property price will drop to rock bottom and when it will hit the highest point. Imagine it tells you exactly the date to buy or sell. Imagine that. Wow. You can time the market if you have such a ball. Imagine you don't have the crystal ball. Oh, a matter of fact, nobody has such a crystal ball. Sorry to burst the bubble. I guess without such a ball, I can safely say that it is impossible to accurately time the real estate market. I heard many of my friends and clients ask this question: when is the best time to invest in property? I guess it is human nature to always want to know the future before everyone else do, and always want to be the one that outsmarts everyone else. Sometimes many will base on personal experiences they have to time and predict the future market. More often than not, personal experiences can be very limited and myopic. Probably there could be no best time to invest, and maybe the best thing to do is not to time the market. So why should you not time the market then? Let me share with you some of my thoughts. First and foremost, we need to understand this important point when it comes to investing in Singapore property. It is a long-term investment. If you are thinking you can buy and sell within weeks, months, or maybe 2 to 3 years and make lots of money, then maybe real estate investment may not be the investment choice. Property investment in Singapore require patience. Past decades of property market movements had shown us that significant profits await those who wait. Patience is a virtue. Many became millionaires in Singapore because they have such virtue. Secondly, future drop in price may be higher than the current price. Oh, why is that so? Supposing I want to time and wait for one property price to drop. It is valued at $1 million. But the opposite happened. The $1 million property rises in value to $1.2 million. What could be my thoughts when such thing happen? Most likely, I will tell myself to wait some more. The correction is going to happen. So I wait and wait, and it really happens. The news says property prices drop. But guess what? When that happens, yes, the valuation drops. But it drops from 1.2 million to 1.1 million, and I decided to buy. This is higher than the beginning price of $1 million when I started waiting. I could have bought that property at $1 million instead of 1.1 million. Okay, you may be thinking that if the property price really dropped from $1 million. Remember my first point, property investment in Singapore is a long-term investment. As you hold it and ride it out over a long period, you probably may be laughing to the bank in the future and likely can't recall at the instant how much exactly you bought the property. And this leads me to my third point. Studying and understanding the fundamentals of Singapore property market can give you a very good indication of where the property market will head in the next 7 to 10 years. When I mention fundamentals, I am not referring to listening to someone here say, but rather looking at the actual statistics, the figures, the plans released, and other facts. If the fundamentals are bad and you don't see a good ratio of demand versus supply, you probably should exit or look for other investment opportunities. But what if the fundamentals are good? You see what the government is doing and will be doing. You see how much the government and private sectors are investing in developing certain locations. You see the future potential growth of demand, and the supply may not be catching up. Many other indications. These fundamentals are almost as good as the traffic signal pointing to the airport while you're on the taxi going for your holiday. Knowing that the fundamentals are good, probably the next step you could be doing is narrowing down the location with best growth potential and working out your investment and financial plans with professionals like a realtor. Above are my thoughts why you and I should not time the market. I believe there could be many other reasons. So what should you do if you want to invest in Singapore property now? I would suggest to start by planning to minimize risk, because in any form of investment, there is no such thing as 100% guaranteed returns. If you'd like to understand more on minimizing risk, have a watch at my past video on minimizing risk. And let me leave you with this last phrase. Don't wait to buy property. Buy property and wait. Last but not least, if you like what you have watched and like to see more of such videos, please like and share my videos and subscribe to my YouTube channel. This is Seth, and thank you for watching.